Welcome to DeFi by Design, where we talk all things blockchain and cryptocurrency while striving to educate, empower, and enrich.
What's going on, guys? Real quick break for the DeFi by Design podcast sponsors and the DeFi Slate sponsors who make this all possible. First, we have 𝗷𝗍, a money market protocol that allows you to borrow and lend and leverage your assets to earn interest, right? So if you want to deposit some stable coins in there, currently you can get 3, 4, 5, 6, 8% APYs on stable coins, which oust any bank in the world. As far as we're concerned, you can deposit any Ethereum-based asset that is listed there, borrow against it. You can borrow stablecoins. You can borrow other assets like ETH or 𝗹𝗶, Link, even the 𝗷𝗍 token itself. 𝗷𝗍 is the go-to protocol for any sort of borrowing and lending. Check it out at app.𝗷𝗍.com. The next one we have is Oxys. Oxys is a new crypto wallet, oxys.com. You can store all of your crypto there. They have quite a few options. They're integrating new DEX features soon and allow you to have a non-custodial way to store your crypto safely off of centralized exchanges and also just not in a MetaMask or in your own ledger. A bit of extra security there. Next, we have 𝗵𝗶𝗴𝗵. 𝗵𝗶𝗴𝗵 is a decentralized perpetual swap protocol, basically allowing you to trade on leverage on the Ethereum chain, right? They're coming out with V3 very soon. By the time you're listening to this, it might already be out. They are a super solid team, and they're pumping updates and allowing you to trade decentralized perpetual swaps on ETH, Link, and a few others, all on Ethereum, all decentralized. So that is 𝗵𝗶𝗴𝗵. Next, we have 𝗵𝗶𝗶. 𝗵𝗶𝗶 is a decentralized stablecoin. It's an algorithmic stablecoin that is pegged to the purchasing power of commodities. And basically, it measures what value $1 buys in terms of a commodity index each week. And then it provides you with essentially a store of value that allows you to continuously evade inflation while maintaining, a stable aspect as if it was $1. And that is the 𝗵𝗶𝗶 protocol. Check them out on Twitter. Finally, we have Diversify. It is an L2 decentralized exchange. They allow you to basically trade in a gasless and feeless manner, big volumes, whatever quantities you need. It's almost like a centralized exchange on Ethereum, but you are the custodian. They do not hold your coins as a centralized exchange would. You have full control, full power. So really, it's almost like a centralized exchange capabilities on a decentralized exchange, and that is Diversify. All those sponsors make this possible. I know it's a lot to take in, but thank you very much for listening, and let's get back to it.
Welcome back, ladies and gentlemen, to the DeFi by Design podcast. It is a happy pump day, as the crypto degens would call it. I'm just kidding. Nobody calls it that. Please don't ever call it that. I'm here today with Robbie, of course, the OG. We are here today with Geyser team. We got Alex and Ben and Devin, and we're going to be talking all sorts of things: token launches, what's going on in the IDO space, how there's been a change of tokens, what's going on with Geyser, updates overall in the market, kind of what you can look for and see and participate in these token launches, and all sorts of these new primitives that we're able to build in DeFi. There's a lot going on today. There's a lot of nerves. There's a lot of emotion, but we're excited to have a good conversation about actually creating and building, because in the bull market, that kind of goes awry. So I'm going to pass it over to Robbie. How do you feel about the market today? What's going on in Rob's life?
Yo, I'm doing well. Hope everyone else is having a great day. Yeah, so the markets are looking about as green as the grass outside. It is beautiful out here in Florida. It's just a great day to be out here. So I don't want to take too much time. I want to pass it over right to our guest of honor. We got everyone from the Geyser team here, and I'm super hyped because this is a protocol that takes projects in their infant stage and just helps them grow all the way into some of the just banging protocols that are on Ethereum now. So I'm super stoked to hear more about Geyser and what they got going on. I will pass it over to Alex. Alex, how you doing today, man?
Doing really well. Excited to be here with you guys. Excited for round 2 at least with you guys. Always a pleasure. Geyser team here, myself, Devin, and Ben, and we've been, launched a couple months ago. Did a great podcast with DeFi Slate, but now going into our V2, just kind of telling a larger story of where we're headed, what's going on, and how we're going to help kind of boost this community even further.
Super. Yeah. So, Devin, how you doing today, man? I know we're all excited for V2. We're going to get right into it.
Doing great. Thank you both for having us on. Very excited to share a little bit of what's coming and talk about how we think that's going to affect the ecosystem around us.
Yeah, for sure. So maybe you could just kind of give everyone a primer if they didn't hear the last podcast. What is your role with Geyser?
Sure.
And just real quick, what we got coming up for the future.
Yeah, so I'll start with a quick intro on my side. My name's Devin, one of the creators of Geyser. We launched back in October with our V1, and context-wise, we're currently marching towards a V2 launch, which we'll talk more about in a bit. My background is a little bit broad. I've worked in various areas of tech across machine learning, robotics, autonomous driving, and obviously with Geyser, working in the DeFi and blockchain space. I think as far as interest in getting into DeFi and just decentralized computing, we really look at it as a new foundational technology that's going to have an effect on really every part of software and IT from here on out. No matter where you're looking in terms of industries, in terms of technologies you're using or building today, understanding how to do that in a decentralized way and understanding these core technologies are really going to be critical just as a new architectural layer.
Yeah, and that's being built every day in DeFi as we speak. And there's so much going on that it's tough to keep track of. But when I think of architectural layers and kind of what's being built, Robbie hit on this earlier. We're kind of in the phase of being able to have projects be launched in this kind of permissionless manner, right? And that's super interesting to have this ability for y'all's protocol to have been launched in the last 4 or 5 months now. Boom, fully fledged. You didn't have to ask anybody. There was no startup kind of it's all a startup, but what I'm getting at is there's very low barriers to entry, should I say, almost none, right? For anybody worldwide, right? So now that y'all are together and have put together this protocol over the last few months, you've been able to live out some of these architectural layers, right? Live out this kind of vision of decentralization. And so where I'm going with this is, where is the future headed as far as the current landscape of these protocols being able to just like pop up? Right. So I'm curious if you guys are in the camp of thinking that having a mental model for token launches and for protocols is going to be this new open source way using this DeFi applications, right? I'm just curious kind of what your mental model is for this idea of starting up a protocol now that you have been in this for about 4 or 5 months. Kind of how do you feel it's going to change and grow over the future?
Hey guys, I can probably take that. So my name's Ben. I joined up with Alex and Devin in probably November, I think end of November, to help build Geyser. And it's an interesting question because what DeFi has been so far has been a lot of people who are very technical and kind of able to build in Solidity, shipping projects and kind of forking each other to build other cool stuff. And I think kind of 2 things come to mind. First, there's going to still be that open source nature of things. People are still going to be able to build projects and not have too much of a barrier to entry. But I do think it's going to get professionalized a little bit. So when you're talking about these sort of IDO platforms, I think there's going to be a kind of ecosystem of projects, a different range of them. Some of them maybe will be kind of lower barrier to entry. You can still make stuff if you're a college kid. But at the same time, I think we're moving in the direction of like really professional shops building very technical protocols, particularly on the finance side. So it's kind of a both and question where there's going to be that lower level. People will still be able to build. But professionally speaking, I think it's going to develop into a much stronger industry in and of itself.
Speaking about some of the options and platforms that are out there now, in terms of IDOs, you have Polka Starter, Solana's launching their version. They got Sol Starter. And then obviously Uniswap is, very open, very decentralized. Anyone can create a liquidity pool there. Couple questions. What is the validity of those kinds of platforms long-term? Do they really bring significant value to the ecosystem? And second, how does Geyser fit into this IDO?
Yeah, I can't speak exactly for Alex and for Devin, but I'll give you my take. I think for now, something like Polka Starter is going to be helpful for certain platforms to kind of launch on. They'll naturally get a community. There's a case for some projects to use them. Generally speaking, I'm pretty bearish on that. I think a lot of it is just them building kind of a community and selling tokens into that community, where we're looking at trying to have a longer play here ultimately. So as Geyser, we're trying to create an open tool that anyone can use. So it's not like we're coaching you necessarily all the way through the whole process, but we are offering a bunch of kind of key building blocks that people need to launch a project. So if you look at something like SoulStarter, it's a newer blockchain. There's not as much activity there. It's going to be a helpful project to kind of create an ecosystem around Solana. But for Ethereum, I think the longer term play is we want to be a tool. And a lot of the core teams, the people that are really building lasting projects, either are building stuff themselves or are using kind of big tools that we hope to become one of those to kind of execute their vision. So it's kind of, for now, they are effective. I don't see in the long run that them kind of lasting. But Alex and Devin may have other takes here.
Alex here. I ask myself a question whenever I jump into any venture, whether it's a crypto venture or a classic entrepreneurial endeavor, and it's, do I think this is going to exist in 5 years? And if you can answer yes to that question, I think that there's possible value in the investment. If the answer is a quick no, then it's either a pump and dump scheme, a get rich quick scheme, or maybe a quick flip. But I really ask myself, is there value enough to make this last for 5 years? And so when I look at crypto, as Ben mentioned, there are a lot of projects that are kind of selling a token into a community. There's a validation of a concept. Maybe it's tokens that are rebasing. Maybe it's tokens that are distributing funds to holders. Whatever kind of mechanic they're looking at. These are all proof of concepts. But I'm never really super confident that specific player is going to be the one that solves it for 5 years in the future. But the way that I look at Geyser is I say to myself, okay, here's a tool that we've built that is necessity 5, 10, 50 years in the future. We're going to need, without a doubt, a way to distribute decentralized assets. No matter what, decentralized assets are an easy thing to create and a hard thing to distribute well. And we're going to need platforms that enable that. And so when I look at Geyser, I say, how do we position ourselves as the platform that enables that for the long-term future? And so when you combine kind of that line of thinking, that's where I see the differentiator between platforms and tools like the Uniswaps, the Geysers of the world, versus, tokens that are simply kind of maybe trying a new mechanic, getting people hyped up about them, but then not really seeing what do we know that this is going to exist, in some form going forward. And so that's how I kind of delineate between at least the things that I invest in and much more specifically the things that I actually want to build and invest my time in, which is arguably the most valuable resource here.
Gotcha. Yeah, and to provide a little bit of context here for anyone who's not familiar, you might be familiar with ICOs, which is initial coin offerings, and maybe not so much with IDOs. So the difference there is that a IDO is an initial DEX offering. It's a coin offered on a decentralized exchange, where an ICO is just offered to maybe a public sale or maybe a private sale, but it's an initial coin offering, not necessarily on an exchange of any kind. Yeah, like Alex is saying, there's value here because decentralized assets are going to be part of the future. They are already kind of part of the present, and there needs to be a way to distribute those tokens into the people or the market that wants to consume them. So that's where Geyser's value proposition is, right? Really on the token distribution side of things, early stage projects that want to put their token into the community and rally people behind these value propositions. So
yeah, and Rob, I think with the evolution of the ICOs to what we have now, I think generally speaking, it's a much better landscape for token launches. I mean, the ICOs were just an absolute shit show of a craze, of a pre-sale pump and dump just all over. And so I think this maturity and sophistication of protocols launching tokens in a way that they want to give the community a large amount or share of the equity, if you want to think about it in that sense, allows platforms like Geyser and Uniswap and others to basically flourish and have a position and a product market fit. And so basically it allows you to have something that actually is, like Alex is saying, needed over time. I'm curious what you guys think, just off the top of your head, what some of the biggest product market fits are in DeFi right now. Like, what do you think is, like the top two, okay, this is needed for like the world on a broader scale? I know we're kind of going off on a tangent here, but I'm genuinely curious.
Can I say Geyser first? Before Devin speaks about anything else, I'm just going to mention Geyser. If you guys didn't know this, we are the Geyser team. We're talking about Geyser, but no, absolutely we have other ideas. So Devin, go for it.
So obviously Alex's answer. But I think in terms of projects that had an immediate need, first I think of are DEXs, Uniswap. Those lend themselves perfectly to the technology where, DeFi gets the first focus as far as industry goes. I think decentralized applications will kind of overturn a lot of other industries eventually as well. But for now, focus on finance, lending, and trading. Those are two pretty easy wins.
Yeah, I agree. And I think a lot of those lending and borrowing protocols have more of a moat, if you will, around just like a general DEX. So those on the speculative and investment side seem to be appealing in a sense of, oh, this could be around in 5 years because chances are it can't just get forked and replaced. But let's bring it back to kind of the IDO scene and what's going on there. So when a project is coming up to launch with one of these IDOs, right, on, and is that the term for when a project is launching on Geyser, or is there a different term that y'all use?
We don't use the term IDO. To me, an IDO is just any kind of launching of a token using a DEX. So you'll see that periodically happen on Balancer or Uniswap, where people will just list a token. So like 𝗵𝗶𝗴𝗵 listed on Uniswap. Recently, there was 𝗵𝗶𝗶𝗵, this gaming platform by the brothers of 𝗵𝗶𝗃𝗵𝗃, who founded Synthetics. They did their IDO through Balancer. But for us, it's essentially, we're kind of coming alongside people who may be doing an IDO, but won't really name it as such. So essentially, we're saying like, okay, we're going to help you accomplish some kind of goal in DeFi. Often that's to provide liquidity on a DEX like Uniswap or SushiSwap. And so people who come and use Geyser ultimately are just using us as a tool for whatever goal they would like. That could be an IDO in their marketing language. But generally speaking, we're kind of a launch tool more than a launch platform. Maybe Alex and Devin would argue with me on the language, but that's at least how I see it.
Is it more akin to like a Kickstarter, to use kind of the traditional like funding route, where people can come and get access to liquidity that's sourced amongst a bunch of different people in the community?
Well, Alex, you did a Kickstarter, right?
Yeah, I've both been in DeFi and successful on a Kickstarter. I won't plug other separate non-DeFi businesses here, but I think that the crowdsourcing mechanic of basic liquidity is certainly one use case. If we really think of what Kickstarter is, it's about crowdfunding interest in the product, and oftentimes what people are looking for in a Geyser is to crowdfund liquidity provision. Because if I'm a token that wants to have an IDO, I need to provide both sides of that pool, right? I need to provide my token, but also the liquidity in the base token. You oftentimes ETH or something for that IDO, and I might not have that, right? I know that certainly Devin and I didn't have that at day one to have the ETH to put a pool together. But now I say, hey, community, if you care about what I'm building, if you care about the ecosystem we're trying to create, be a part of supplying that liquidity, and we're going to reward you for that in the token that we know that you believe in. That's one kind of cyclical way that Geyser can really be helpful, is incentivizing that action by the community to be a part of the crowdsourcing method. I just wanted to mention though that Geysers are, as Ben said, not just about liquidity, but also about really any sort of goal or incentive that a project has in the blockchain, because we can really incentivize anything that can be tokenized. If you can put a token somewhere to prove you're doing something, Geyser can reward you for it, and a project can reward you for it. And so I think thinking a little more broadly, IDOs are a use case where we can be supplemental. Geyser is a supplemental tool, and there are other ones as well. I know Devin did a great blog post a couple months ago about different ways that someone could use a Geyser besides just creating liquidity on an exchange.
On that note, Alex, what's an example of a project who was able to come in, launch on Geyser, and incorporate some of these incentives, and see some working projects and success?
Sure. So I guess first off, to talk a little bit about broadly what types of use cases or programs you see, the most traditional one is certainly liquidity mining. You have a project that wants to distribute tokens, as we've just been talking about, to meaningful participants in their ecosystem. So we've had some very successful liquidity mining programs run on Geyser, notably Vesper, a project that launched in the last month or two. They ran 2 different liquidity mining programs on Geyser, one for 𝗪𝗎 and one for Uniswap. And we saw a huge amount of success, both in terms of the participation, the growth of their underlying liquidity pools, and then also the distribution of those rewards to the community members. One thing to mention, as far as discovery goes, and this gets a little bit more into the V2 conversation, we would urge anyone who wants to check out the projects that have launched on Geyser to go to our Discover page, which is currently at discover.geyser.io. You can see a list of all the projects that are currently running, different Geysers, see what tokens they're incentivizing and rewarding. And it's a great way to find new projects and get a feel for who's actually adopting and who's actually using the overall platform. As far as some other use cases go that have been successful, we've seen some interesting community mining programs. Ben dropped a nice tweet thread about this maybe a month ago, but a lot of projects, they want to partner together and do some distribution of tokens to the holders or to liquidity providers for another project. So, the ability to quickly spin up a new incentive contract with the Geyser platform allows those more creative models to be quickly rolled out and quickly experimented with. And then finally, just I guess one other pattern to mention that we've seen launch recently is for NFT rewards and NFT farming. So this, I won't go into too much detail because I think we talked about this a little bit on the last podcast actually, but we have seen some cool examples of projects rewarding a made up proxy token that's basically like your Chuck E. Cheese ticket. And then that gets used to redeem in a listed marketplace for NFTs such as OpenSea. So that's a cool pattern where you can really easily use our current contracts to reward other types of tokens or digital assets.
Super cool. And you mentioned the V2 conversation, so let's just transition right into it. You hit on a lot of different use cases, and the flexibility of Geyser is something that's really cool, and I'm sure is going to attract a lot more projects. So what's coming up in V2? I know we were talking beforehand, the website is getting a whole makeover, so that's going to be cool. Is there more use cases that are coming to the table? So go ahead and.
Sure. So I guess to start, I would break out the term V2 has really started to aggregate a huge number of different efforts and different features and upgrades. So I want to break it out into probably 3 different categories. First being core contracts. There's a lot at the lowest level of on-chain computing that is changing and improving. The next piece is web app and website. If you've used the web app, if you've gone to our website, there's certainly a lot to be desired in terms of user experience. And then the third one is more on the ecosystem side and allowing other projects and third parties to be better consumers of the underlying Geyser technology. So on the core contract side, probably 3 to 4 major changes plus some big efficiency improvements. This is probably less exciting to someone who's not a developer, but we've completely overhauled the architecture of the Geyser contract to be much more extensible, but still in a safe way. So, I think a lot of times projects struggle with this dilemma between upgradability and agility and addressing and keeping up with this fast-moving pace or this fast-moving space. But at the same time, the whole point of decentralized computing is the security and trust guarantees you get. So those 2 things can be very difficult to juggle. And we think we've taken a really nice approach at how to provide that extensibility, but not upgradability. And we'll cover that a lot more in an upcoming white paper that details the architecture. But anyway, that's to say we're really ready to go as far as supporting new types of incentives, new types of mechanics, and continuing to upgrade the Geyser tech stack at a much faster pace.
And just to kind of bring that home a little bit here in terms of the feedback that we've gotten from the past couple of months, when we launched V1, there was a lot of questions about configurability. Right, that's the thing that most products ask us for is, can we do it this way? Can we do it that way? And our answers were, well, you can configure this, you can configure that, but you can't change that fact about this. And I think that when we went into V2, the big question was, how do we offer up a lot more configurability and also configurability that covers things we don't even know people want yet, right? Like we know what people have asked us for in the past 6 months, but for all we know, we've got DeFi, we've got NFTs, there'll be something new a year from now we haven't even thought of that we want to be able to support. And our new V2 system allows us to literally, without changing any of the security of the previous contracts or any of the security of the previous Geysers, actually add on what we call modules, these new Geyser modules that you can customize to have different configurability and different kinds of mechanics that will help us support other different use cases in the future. Kind of like slapping a little Game Boy cartridge into your single Game Boy and getting an absolutely totally different experience. That's what Devin has really been at the core of developing, and I want to give him a huge kudos because as the person who comes back and assists where I can and reviews code as a second set of eyes, it is one of the most elegant smart contract configurations I've ever seen. It's absolutely amazing. It is not just one single file you read through on Etherscan. You're like, oh, there's 5 functions here. It is really bringing Solidity development to another level with the work that he's done. And so a lot of pride for what the team's doing internally to enable V2, but really a huge leap in configurable DeFi, not just static stuff that you can't change without kind of, okay, everyone, let's draw your stakes. We're moving to a new pool now. That's not really what we're looking for here. We're looking for a lot more extensibility.
Yeah, and I thought V1 was flexible, but no, it sounds like you guys are really just making strides in the versatility of Geyser and what you guys are bringing to the table. Because at the end of the day, you don't really know what's coming down next. And I know Devin mentioned how fast paced the industry is moving. You kind of have to roll with the punches. You have to think about, we're not even going to be able to predict what's coming up next. But you want to give people the ability to use Geyser with that.
The first step in all of this is a technology that we're calling a fountain, which is our first additional module on top of the original Geysers. As some of you may know, and some of you this might be the first time hearing, when you're staking in a Geyser, you can actually spend Geyser token to multiply your rewards at the cost of other people's rewards. It's a very competitive system that takes an investor a lot of kind of forethought into the right timing and the right strategy for staking and unstaking to maximize rewards. Well, one thing we've heard from a lot of projects is, hey, we appreciate the competitive nature of this, but some of our users are looking for a more friendly version of this that's a little more set it and forget it, right? And so we see other staking contracts, the synthetics one that's been copied, every which way, that we thought were, interesting and validated that concept of friendly staking, if you will. And we've basically added on this new module, Fountains, as our first additional module that allows friendly staking, but also some really cool mechanics about how you can use Geyser to still increase your rewards without affecting other people. And that's a pretty cool thing that we're actually, with every module, increasing the scope of value of the Geyser token. I'm not here to shill the price of Geyser, et cetera. All I'm saying is that we want to make sure that anyone who is holding it or wants to use it that has maximum utility in the staking and unstaking space, in the yield farming space. And I think that, one goal that we have is to just say, how else can we make this interesting for people? Because we don't see Geyser as kind of a non-utility, et cetera. It really is a fuel for a whole system. And that system is really just being born with these new additions.
It almost sounds like, I know ETH is money has kind of taken the narrative over, but I remember when the narrative was ETH is oil. And it sounds like Geyser is like just the wells of oil beneath the earth. And you got to use your ETH to like dig that hole and start piping oil, out of the Geysers.
Yeah, I think one very intentional design decision we made was to launch and use Geyser as a utility token first. A lot of projects, they look at, how do we launch a token that accrues value and that you hold and that people want to sit in their pockets and have some crazy economic system around to, game the economics of it. You have whole roles in projects that are dedicated to tokenomics for that reason. We try to really approach this from a pure use this Geyser token as a way to exchange value and really be the medium of value flow between the end user and the projects, both between those two parties and then also across the entire Geyser platform. That's really the way we're coming at this.
It's a very composable project because you have vertical integration as well as horizontal integration. You're bringing together a lot of different projects into one common ecosystem, but then you're giving those projects multiple layers of value through the Geyser protocol, which is super cool and certainly adds to the value proposition that Geyser brings as a whole.
There's just something else to think about as a good example for how this is working. So if we have Geyser and it is becoming this ecosystem, like you're saying, kind of a center of gravity for all these different projects that we can visit. If you're an investor, you can just go there and you see a bunch of activity on all these different kind of projects that are using us. One just kind of example that's worth exploring for people who may not be familiar with the product or maybe who aren't developers or whatever. It's important just to kind of game it out once. So if we, Alex mentioned Vesper. Vesper Finance is kind of a smart yield product similar to Wirearn, where you can deposit your funds and it kind of puts that capital into a strategy, and then you earn some money without having to kind of babysit your money. And what they did is they took their Vesper token, they launched it, and then they said, okay, we need to create some liquidity on these two major exchanges, right? SushiSwap, Uniswap. We're going to use Geyser, right? So we had some great chats with their team. They're super smart. And they said, okay, we actually believe in you. We're going to try this out. And so they put together a 1-year program essentially for their liquidity mining using Geyser. And this is to Devin's point about a utility token being kind of our main goal right at the beginning. Vesper creates their Geysers. People are really excited about that. They're really interested in getting more VSP. So they stake and unstake quite frequently in this competitive kind of environment where they're just trying to maximize their VSP, get as much as they can in terms of rewards. But in doing that, them as a development team, they actually get all of that Geyser. It's sent to them, right? So if you, Robbie, go out there, you stake some of their Uniswap LPs into the Vesper Geyser and you unstake, right? You're going to get a bunch of rewards. You're then sending that Geyser to their team because their treasury address deployed the Geyser. And what happens is they are then stacking a whole bunch of GYSR tokens, right? So not only do they get the upside of actually deploying a Geyser and having this whole incentive mechanism work for them because liquidity is going up in both SushiSwap and Uniswap, they also get an income stream, right? They're also getting Geyser tokens, which they can then use to just fund their project. And so they had something like, I want to say in the first 6 weeks of using our product, they had about $500K US worth of Geyser tokens just flow straight into their treasury. So they were able to do a bunch of other stuff with that. So it's kind of like, this is the utility that we're bringing. And that's just the first project that's really worked with us at scale. So it's exciting to see where it could go.
So let's go over that example one more time. We're approaching this from the use case of liquidity mining, right? And these liquidity providers are getting paid out in Geyser tokens. So if I'm developing a new project and I need funding, in my treasury, and I'm thinking about launching a liquidity pool soon. So, if you're a developer and you're thinking about a new project, listen up. If you've been sleeping, now's the time to listen. So I can come to Geyser and I can launch my token essentially on Geyser. Let's say, I bring 1 million of my tokens, and these community participants that are a part of Geyser's ecosystem can provide their liquidity and basically fund these tokens and get paid out in Geyser.
Why don't we do this? Let's say DeFi Slate is starting a token because you guys are doing so well that you just start the DeFi Slate token. Okay. So you come up, there's 1 million DeFi Slate tokens, and you just want to share this with the world. What you're going to do is you're going to come over to Geyser and you're going to say, okay, well, we want people to have liquidity on Uniswap to trade this DeFi Slate token, right? So we're going to start a 1-year Geyser that's going to offer a bunch of DeFi Slate token rewards. Alex, Devin, and I are really bullish about DeFi Slate. So we're like, okay, we're definitely going to get in on this farming, this liquidity mining process. We're going to buy some DeFi Slate tokens, take Ether, stake that to Uniswap, because let's say that your Geyser was targeting Uniswap liquidity. And then we're going to take these liquidity provider tokens, stake them into this new DeFi Slate Geyser, and be rewarded with more DeFi Slate tokens. So it's actually you guys setting aside a reward amount that you're going to reward people for doing this action, which is providing liquidity on Uniswap so that people can maybe trade your token, for example. Now, in addition to that, we're going to unstake maybe frequently to get as much kind of rewards of this DeFi Slate token as we can. And in doing so, we're going to send some GYSR into your treasury account, essentially, because it's your wallet that deployed this DeFi Slate Geyser. And so you walk away with 2 wins. The first win is there's now a huge amount of liquidity on Uniswap for your DeFi Slate token. And you're also getting a bunch of GYSR into your treasury, basically because people are interested in staking and unstaking to maximize their rewards. So if you have a project and you essentially want to accomplish some goal, i.e. probably providing liquidity or getting people to do that on your behalf, and B, get additional funding, you would basically consider using us early in your process.
And I want to just add something else that I think is so critical to this, which is that, again, Vesper did this to the tune of $500,000, right? That's an amazing amount for any project. That's salaries for a year for a whole team to keep on working on this stuff, as well as audits, marketing, etc. But even more importantly, Vesper did not have to sell their own token to continue funding their project. The project creators no longer have to dump their token to keep things moving. Instead, they can basically use Geyser that they're accruing through this program. People are happily giving them to maximize their rewards in an effort to fund their project. So instead of seeing projects basically hurt their community every time they try to help their community, right? We want to spend some money to get more devs or to get marketing, but to do so, we've got to lower the price of our token by dumping a bunch of our community. No more of that, right? You can come into a Geyser.
We've seen that plenty, right? There's so many tokens that as soon as they launch on Uniswap, there's very low liquidity, but the price is very high because the pool just launched, and the devs or whoever owns the token, maybe it's VCs, want to dump because the price is high and they know it's not going to last.
Right.
And they slip the price all the way down. Exactly.
And so that slippage, is caused oftentimes by the large scale holders, which many times are the team. And I know that, in Vesper's case, instead of selling $500,000 worth of Vesper, which for any project besides the huge, massive ones would absolutely change the price of the token. Instead, they're selling Geyser, which is exactly what it's built for. It's built to be that buffer to help people get that funding. And so I think there can be a lot of trust built with a project that uses Geyser because they have the confidence that that project has less incentive to dump on, right? Because they're having other methods of funding that Geyser's providing.
Yeah, it's genius. And on the dawn of the launch, there's automatically an incentive mechanism for token holders of, say, in this case, VSP, to rather than sell if they have a large pre-allocation or some sort of allocation, they can then come to Geyser and stake and earn yield rather than having to sell. I mean, it's you don't have to sell all because you can earn a good amount of yield. I mean, I was looking at the APYs earlier. There's some in the above 500% or some, 100%, 200%. So between that incentive mechanism and the funding, I mean, I kind of am starting to really wrap my head around why this idea of rather than building I don't want to say a one-off gig, but a tool. The word tool describes Geyser very, very well. It's very utilitarian. I almost want to say altruistic in a sense of the greater ecosystem. Now, I know you two little guys and Ben, you guys aren't small, but you guys are trying to get your little paychecks. I mean, so are we over here, right? But at the end of the day, this is almost a utilitarian, altruistic tool. It's it's awesome. Once that light bulb flicks, I mean, it makes you wonder why projects aren't rapidly coming. Now, to follow up on that, are projects able to deploy these LM schemes or liquidity mining schemes and programs with y'all after they already have launched? Like, can somebody else who's already had a token, can they come and get their scheme, say, after 6 months of being active on Geyser, or do you guys strictly focus on new projects?
So there is really no barrier to entry for anyone. If you have a community member whale who has a interest in incentivizing something, they can take their supply and set up a Geyser. So that there's in the spirit, like you said, this is an open platform. This is not something that we're controlling by any means. This is anyone can go and launch a Geyser. There's no fee to launch one. You pay gas to create those contracts. Now you own it and you can fund whatever funds you happen to have. That could even beyond your own project token. It could be ETH. If you just wanted to incentivize some action with a stable coin, we actually saw someone do that fairly recently.
Sweet. So it doesn't have to just be new projects. That's awesome. Yeah. I mean, a lot of projects are trying to figure out how to basically get more liquidity. And it's oftentimes, okay, let's launch a liquidity mining scheme, kind of on the broad scale here of the longevity of, say, a platform and a token like VSP. How do you guys feel about these liquidity mining schemes as a long-term mechanism of growth and sustainability in DeFi for a lot of protocols? And then we can get to the contrary of not doing them. But I'm curious what you guys think about the sustainability and the idea of liquidity mining in the shorter, and midterm to accomplish a goal, but then obviously over the longer term.
I mean, I think that I go back to what I stated earlier, which was this question around, do I believe it will and should exist in 5 years? And I think that if the protocol and the technology is something that matches that requirement, then this is a great way to offer that distribution on whatever timeline it is. Like hypothetically, the problem that projects are running into is we made this token, it has no value because no one has it. No one's able to use it for anything. So our goal is to get it out to people. Once it's out, if we've built a good enough system to maintain its use, that's not predicated on just people trading it up and down, but actually some sort of real use, which is where, again, that 5-year rule really comes into play. There's absolutely no reason why this shouldn't be the method through which people distribute in a fair launch, right? So an example might be, I have a token that becomes the absolute way through which we facilitate the trading of cows in the real world. We tokenize cows and we trade cows, and that's what it is, cow token. If there's going to be a market that requires cow token, and we believe that to be true in this example 5 years from now, I need to get my cow token out to the communities, and I do that over the next year. I do it fairly because I don't want someone who comes in 4 months from now not have an opportunity to use my technology. I want a fair launch over the course of a year. I don't need to liquidity mine for the next 40 years. I just need to make sure that my token, which facilitates the network, is out in the world in such a way that people can start to use it in the ecosystem. And then 5 years from now, there might not be a reason to provide that much liquidity besides maybe the Uniswap fees or something else like that. But at that point, the token's found its home in its use case, or it hasn't. And it's not really dependent on liquidity mining anymore. It's dependent on cows. Are they being born? Do you need to trade them? So that's kind of my take is, if the technology is going to exist, liquidity mining isn't going to be the reason it does or doesn't. It really has to be, what's the utility after that ends?
And I think a good example of that is 𝗹𝗲. They no longer do any liquidity mining for their token, but the protocol exists, is growing massively every day, right? And I mean, totally. I think that concept of inflationary to start, kind of, for a fair launch over X period of time, and then reward those who were with you in that inflationary period and who gave you liquidity by kind of slowing them down and making it more of a deflationary kind of mechanism, while having the protocol be fully fledged, usable, and a tool like Geyser is. I think that's good for sustainability. The question becomes incentives. We can touch deeper on that, but Rob, it looks like you have a point to make.
Well, yeah, I think there's just a visualization that can help us picture kind of what that growth schematic looks like, that growth trajectory. You want to, if you're an early stage project, you want to hit that inflection point where growth rapidly raises. You bring in community, you have a lot of people rally around your token or your project, and then there's a lot of adoption that takes place, and you build on that network effect. Eventually, you hit the top of that S curve. And that doesn't necessarily mean that you want growth to fall and you start devolving, but you just want to maintain. And maybe you hit kind of that peak of your trajectory, but you don't want it to fall off. So you kind of hit that deflationary cycle. You want to slow everything down, and then all of a sudden it's just about maintaining that point where you're already at until maybe things subside a little bit. You can find new use cases, and then start to grow again and hit more inflection points.
A couple quick points. I think you're all right on. The whole idea really with any incentive program is hitting that critical mass. I think any well-designed protocol is, by design going to be self-sustaining once it's there and once there's volume and true usage. So really any good distribution program should just be the on-ramp and should get you to the point where there's true utility, true usage, and the protocol is working the same way it was described in the original white paper. For example, in our case, our distribution is basically in 3 phases of the core Geyser token. We had an initial 3-month higher rate of distribution, which is 1/3 of the total supply, or at least from the community Geyser, then a 1-year period and a 4-year period. So exactly how you're describing, we're slowly slowing emissions, as the token starts to gain more and more utility. And I think that in the future, one thing that was just mentioned, actually, adoption changes it, or it can happen at a very different pace across projects. And one really interesting set of designs or mechanisms that people should look out for is more adaptive approaches. Now, if you wanted to, instead of pinning a distribution rate to a fixed schedule over a period of time and a number of tokens, you could pin it to, let's say, the price on a Uniswap exchange. You could pin it to some governed vote where the community decides if people are doing well. There are some interesting approaches recently launched on that were based on KPIs and adaptive rates according to that. You could even do a fixed APY. We actually had someone really recently do that by hand using a Geyser, where as the number of users grew and the staked amount grew and the APY dropped, they said, okay, we're going to add another layer of funding to reward the community. So those kind of adaptive approaches can really help with stability in aligning the value that's being distributed with the value of the current participation. So that, I think that's a really cool new area that's going to be upcoming.
Yeah, most definitely. Those fixed rates are something in DeFi that is kind of new and a primitive that's been around forever in traditional finance, but it's kind of coming aboard. And I think it's going to be huge to be able to understand this is exactly what I'm going to get over this period of time.
I'm absolutely waiting for Devin to call me at 4:30 in the morning one day and be like, hey man, so I was up all night and I've got the fixed APY thing working. It's a new module. You want to launch it tomorrow? And I'm gonna be like, let's slow down. Let's get an audit together. Let's get this all put together. But holy shit, that's just a very, very casual Devin thing to do. So I'm just waiting for that day. I'll be very, very quiet until it happens.
I think you're being too generous.
That's dope. So what's the incentive for a person to hold the Geyser token right now and either provide liquidity on Uniswap or, be a part of the ecosystem? I know that we've covered so many aspects of it, and we're not asking you to, show your bags here, but, why should I own Geyser and why should I stake it and risk impermanent loss?
Sure. That's one. I just want to macro level here for a moment and kind of a cultural choice that Geyser has made is that you'll never hear anyone on the core team talk about price of the token and what we believe it will be. We're here to give investment advice. We're here to build a tool. That's what Devin and I started with. That's what we kind of stand by. But from my perspective, Geyser has a utility, and we want people to be able to use that utility at a reasonable cost. And so we believe that in the run-up to large announcements, V2s, et cetera, that the market, has bullish tendencies towards new technologies, new developments, et cetera. And so from the perspective of an investor right now, or really someone who wants the utility of the token, more importantly, having it at the cheaper prices, hypothetically, is something that's valuable to do when you have that chance. I think that V2, most importantly, token aside, is going to bring more projects to our plate. We know that projects had requests for configurability that we're offering in V2. When we unlock those capabilities, we imagine that more projects are going to launch on Geyser. When people hear this podcast and hear about the tweets that are going out, they're going to be saying, oh crap, look at Vesper's success, look at Space Chain, look at Geyser alone. We launched ourselves on our own platform. Look at our success. And then say we should launch on there. And I think that as the Discover page that Devin mentioned earlier grows and grows and grows, it's going to be more and more valuable to hold that Geyser token so you get more value out. I'll say this last thing here. Now that the Discover page is live, it's kind of a teaser of V2. And when you see V2, you're going to be amazed with the capabilities we have for actually kind of searching for new projects, finding interesting investments, searching by APY, et cetera, all these different capabilities. You're going to wake up every day and look at Geyser and say, what are the good investments for today? Where can I put my capital to earn on it right now? And when that happens, when that shift happens, believe me, it's going to be worth it to have some Geyser because that's the way that you maximize usage of the platform.
Yeah. We hit on technology a lot during this podcast, and just, Alex, as you were talking now, we started to get into the community aspect of Geyser token holders and now what they're able to do with their Geyser and making it just easier to find new projects and new investments, as well as the composability and the flexibility is now going to bring in that developer community of people that want to develop and launch their projects on Geyser. So yeah, I mean, we covered it all from technology to community here. I mean, is there anything else you guys want to put out there in terms of V2 or
updates, token? What the future looks like, Q3, Q4, kind of what you guys are aiming to get done?
Sure. So quickly, we got into such a good discussion there. We actually didn't finish the quick overview on what's coming in V2. So we talked a lot about the core contracts and core tech there. The second thing I want to mention is a complete redesign and rebuild of the web app.
Thank God.
Our focus was definitely on the core tech. that first round, and the web app needs a lot of love. Big shout out to Ian, our lead developer on both the web app and subgraph side, who's been crushing it recently. So look out for that. The Discover page, as Alex mentioned, is just a little preview. The entire flow, plus a lot more, is going to basically be launched along with these new contracts. So, and one other thing to mention is a little teaser. We are adding mobile support. Not something that I knew was important at all before we launched Geyser. And apparently there are a huge number of mobile DeFi users out there. So that's coming. And then on the ecosystem side, there's some really key improvements that help with that discoverability. Exactly the habit forming that Alex is mentioning, where you wake up in the morning and you check, hey, any new Geysers launch. We're adding the ability for projects to add a little bit of description and color around who they are, how to learn more, give me some info on what this incentive program is, what does your core tech even do. So we're adding some ability to index that information and present it on our website. And then also on the community side, we are rolling out that profit sharing program, which we mentioned earlier, which is going to do a lot as far as bringing people together, seeing a common benefit from the usage of the platform at a high level, and also gives us the ability in the future to start doing things like grant programs, or have a governed amount of money coming from the treasury to help new projects get started. So from the community perspective, V2 kind of sets the foundation and enables a lot to as far as ecosystem growth goes.
Yeah, I guess one question that came to mind is these developers looking, maybe they're considering Geyser for their token distribution. What's the timeline of it all? Is there a stage of a project when it's too early to launch a Geyser? It seems like there's plenty of value added even after a token launches. But when is the best time to launch a Geyser during a new project?
It's a great question. Every team that I've spoken to, when they're building the technology, they're asking themselves, how are we launching? Like what's going on? With day one, the contract goes up, initial supply lands in our wallet, what next? And I think it's that planning phase that you should be thinking forward towards a new project, saying the guys aren't going to launch on day one, but planning for it is a really valuable thing to say, you know what? We believe liquidity is going to be one of the things we're focused on, or this incentive is something we're really focused on. Let's maintain some token share for ourselves to then distribute through a Geyser. Sorry, not maintain token share, but rather maintain some liquidity of our own token to actually fund a Geyser with. And for tokens that have already launched, or maybe haven't found success in building a lot of liquidity or hype, this is one avenue to look into, right? It's like, hey, let's try different solutions to this problem that we're having around building incentives. Let's try and put some funds towards Geyser and see if we can draw some excitement. I can certainly say that Geyser enthusiasts, people that are in our Discord and Telegram chatting, they're looking at the Discover page. They're trying to find more ways to make money, to find new projects that are interesting. That is their goal. It's like it's a win-win for both sides, right? You've got a community to tap into, and there's the network effect, right? As we get further and as we get more Geysers on, let's just say this project cow token that launches on Geyser, every cow token user now knows about Geyser, knows about the Discover page, and is looking for other opportunities. So as a new token, you're tapping into other tokens, like basically community building, and you're leveraging their masses. And so every single time there's new Geyser, there's another community that's aware of it, there's another community looking at the Discover page, more eyes on your project. Twitter is so hard to get through the noise, right? Discord, it's so hard to build your Discord chat, to actually get people in there and engaging. If you can find your way onto that Geyser Discover page, the first or second page in some sort of searchability, high APY, high staked amount, high reward amount, you better bet people are going to come in there and say, I want to learn more about this token. I want to get some of this token.
Guys,
hell yeah.
To crowdsource your community.
That's right. That's a good way to put it, and a good explainer for kind of what's to come. I mean, I think there's quite a few early stage projects that I would say that have launched in the DeFi winter, if you will, that are probably going through a similar kind of vibe right now of like, man, like we either got to figure this out, like hype and liquidity and product market fit wise, or we got to think of something else, And so I'm trying to think of a few projects off top of my head. And I mean, the one that I thought of was Swerve, the curve fork. They're probably in a position of like, all right, our multi-sig signers probably don't care anymore. Our community is kind of over it. Not to say that it would be an ideal launch on Geyser, but I think there's an element of a revival of projects of a certain sort that in addition to the initial launch could really be helpful using the Geyser tool. But overall, guys, I really appreciate you guys coming on. This has been absolutely amazing. Rob, great questions, great answers, team. Ben was amazing. Yeah, guys, check out geyser.io. You guys are building a tool that it can be used, and tools are not found very aplenty in DeFi.
Massive amounts of utility. Yes, it's not the buy and hold. It's not the set it and forget it. Although it sounds like V2 that might be coming, but it's a place where you can maximize your opportunity if you really dig in and start to discover the projects on Geyser. Super interesting stuff.
Yeah, thank you so much for having us. And one last closing thought for anyone who's listened to both podcasts. Alex's key example on the last round was Fish Token. And this time he seems fairly fixated on Cow Token. So if anyone's looking for an inkling of, Alex's big next DeFi venture, tokenized animals, you heard it here first.
I was hoping that you wouldn't pick up on that, Devin, because now all my secrets are out in the wild.
In the wild.
In the wild. National Nat Geo token is my next thing. And cows, fish, reptiles, you name it. We're tokenizing it.
Wow.
Launched on Geyser, though. Don't you
Launched on Geyser. Here we go.
Alex Corn is starting to sound a lot like Charles Darwin.
The evolution of DeFi.
Yeah. All right, gents. It was a pleasure. Thank you guys for coming on.
Thanks so much for having us.
Thanks for listening to the DeFi by Design podcast. Until next time, DeFi Slate Team.